So let's talk about something big that's happening in India's markets, the NSE. Yeah, that NSE. Most people trade on it every single day, but very few realize how insane this business actually is. I'm talking about the National Stock Exchange of India, which is finally gearing up for its IPO. And honestly, this is one of the cleanest, high quality market infrastructure plays you'll ever see. Firstly, what is NSE really? It's not just the stock exchange. NSE is the backbone of India's capital markets. Equities, derivatives, indices, clearing, settlement, data, everything runs through this system. It's fully electronic, SEBI regulated, and classified as a critical market infrastructure institution. Basically, the system cannot function without it. Now, here's where it gets really crazy. NSE has a near monopoly power, over 90% of market share in equity derivatives and roughly 75 to 80% in cash markets. That kind of dominance creates a nearly massive network effects. More traders leads to more liquidity, tighter spreads, and then even more traders. Once that flywheel starts, it's very hard to break. Now let's talk a bit about numbers because they are really wild. NSE is a capital light, tech driven business. FY 2026 estimated revenue is around 22,000 crores. EBITDA margins 65% plus and return on equity over 40%. No debt, minimal capex and ridiculous cash generation. That is the kind of business private equity aims about. For years, the big question was, will NSE ever list? That uncertainty is now largely gone. SEBI has issued a no objection certificate, and DRHP is expected around March 2026. So the biggest historical overhang is finally off the table. Growth wise, the tailwinds are structural. India now has 14 crore plus demat accounts, and that number keeps rising. Retail participation is exploding and ETFs, SIPs, index funds, everything feeds directly into NSE's ecosystem. And beyond trading fees, NSE's money comes from market data, index licensing like Nifty, and clearing and settlement. These are high margins, recurring, almost annuity like revenues. Now let's talk about valuation. Using FY 2026 net profit of about 14,500 crores and applying a conservative 40 to 45x forward PE, we arrive at an IPO valuation of roughly 5.2 to 5.6 lakh crores. That translates to around 2,100 to 2,300 per share post listing. What's the upside? A reasonable 1 year post listing target is about 2,700 per share, which is roughly 25 to 30% upside. And that's the best case. If re rating kicks in, the numbers can go much, much, much higher. So, what about the risks? Sure, regulatory tightening in derivatives, technology, and cyber risks, and very long term disruption from new trading models. But given NSE's scale, regulatory alignment, and tech investment, these risks are very manageable. So, here is my conclusion. NSE is a rare asset, monopoly like economics, exceptional profitability, and strong regulatory tailwinds. This is not just a short term trade, this is a long term compounder. My recommendation is buy with a really, really, really high conviction. So, here was it. You can download the PDF of the research right below in the description and like and subscribe.